So this woman, Johanna Garcia, claims that she can work financial miracles. In fact, on her own website, which she conveniently took down after the events you're about to hear about unfolded, but I was able to recover on the Internet Archives, but on that website, she referred to herself as Mother Teresa, and that she always puts friends and families first. Well, that's not what the SEC thinks. Let's dive into it. See, Miss Garcia, as far as I can tell, didn't start out as a criminal mastermind. Like most of the scammers we've covered on this channel, she actually seems to have started out with good intentions and a really, really hard work mentality. And she comes from humble beginnings. She started her career as a tax preparer, and she ran that business really well. But then she started taking on other projects. She starts a realty group, a remodeling services company, a transportation company, and of course, a lounge, all under her brand of MJ. But then in 2020, she adds one more subsidiary to the MJ brand called MJ Capital, and that's where things start to take a dark turn. Ms. Garcia, probably from talking to a lot of clients and supporting small businesses on their taxes, realizes that there's a need for private lending, and she stumbles across this really niche form of lending called merchant cash advances, where a company lends money to a business, but then takes a percentage of the business's daily credit card or debit card income directly from payments processors. And let me be clear, these are sketchy businesses to begin with. And the thing that makes merchant cash advances really suspect is that they're not technically loans. Really, it's more of a commission since it's a sale of a portion of future credit or debit card sales. And because it's not a loan, that allows companies to skirt past usury laws. If you're not familiar with the term usury, that's when a lender gives a loan at a really high interest rate that basically enriches them. According to Dante, usurers get sent to the seventh circle of hell, where they get to sit on burning sand and endure a rain of fire, where each usurer gets to wear a purse around their neck. Meanwhile, they're being swarmed by biting gnats and constantly swatting and pulling at themselves. Dante was metal as f***. But fortunately for Miss Garcia, she doesn't have to worry about that circle of hell because her business actually wasn't using that many MCAs. And that's where things start to really go off the track. In June of 2021, an undercover FBI agent came into MJ Capital's offices. And he approached it as a prospective investor. And he spoke with the office manager, who said that, oh yeah, we can give you a 10% return every month. Guys, that's insane. That would be implying a 120% return. That's completely unheard of, even in these scammy payday loan type companies. And they took the bait. The undercover agent did promise to make a $10,000 investment over a 12-month term and was basically guaranteed a 10% monthly return. They signed the deal and it was notarized. And during this time period, MJ Capital and Miss Garcia were writing loans like crazy. From May to June of that year, they raised $61.6 million, according to the SEC. And just like I said earlier, there really weren't that many MCAs actually being written. And this is where we come to the definition of a Ponzi scheme. See, when investors were starting to take their money out, they actually were getting their promised returns. But those promised returns and the repayment of the principal was entirely dependent on Miss Garcia and her co-conspirators to raise new investor money and convince existing investors to extend their terms of their agreement. This is the literal definition of a Ponzi scheme. And I'm a little sympathetic here, I'm not going to lie. You can see where she would lose the script. She could look at bringing investors in as a way to raise capital, to really get this thing off the ground. And they were writing some MCAs during that time. But where she completely loses me, and I frankly lose all respect for her, is that she tried to cover it up. One of the investors who got scammed got mad and created a site. And she sued that individual. She claimed in that suit against the complainer that they have a small number of investors, when in fact they had 2,150 investors at a time. And with all those investors, they had an extremely small amount of MCAs actually going on, like around $800,000 or so. So all in all, Miss Garcia was sentenced to 20 years in prison over this. And the total amount of money that was involved in this Ponzi scheme was around $200 million. And the investors have lost a lot of money. Here's one of the victims talking about what happened to him.
I was blindsided, and I was devastated. I was crying. I was sad. I realized, what am I going to do?
In general, be really suspect if someone promises you something that doesn't make sense. If Miss Garcia actually found some hack in our financial system that she could return 120% year over year, everyone would be all over it. Not some small South Florida company. That would be bonkers. That would flip Wall Street on its head. Second, MCAs are predatory. Don't make money off of them. Don't try to get involved with them. Just stay away. That's opinion-based, but learn how to make money a smart way. And then last, be extremely careful when picking someone else to manage your money. Most of us work extremely hard for the money that we have. And there are two things that connect all of us: money and health. And recently we've seen people get a lot better at health, but financial literacy is still really lacking. If you're going to pick someone to manage your money, make sure they're well vetted, and know that most people aren't necessarily good stewards with other people's money. Miss Garcia seemed to have a lot of really good things going for her, but then she got greedy and started managing other people's money. And it's wild how people are less likely to care about other people's money than their own money. But if you're not interested in managing your own money and you do find the right person, it can go really well. Warren Buffett started in the 1950s investing family and friends' money. And that's a big part of the spirit of Berkshire Hathaway today. So if you can find someone who takes that great a care and doesn't just say lip service to it, but actually really does care that much, that's a great option. Or you can learn how to manage your own money, which I don't think is actually that hard. I've been doing it for about the last 10 years while having full-time jobs and a good bit of hobbies. And you can do this on the open internet. There's plenty of really good material out there. But really at the end of the day, I really don't think there's any substitute for gaining financial literacy, whether you're choosing to manage your own money or let someone else manage it. It's just too important to not. And if you do manage your own money, there's nothing wrong with doing passive investing, which is basically just dollar cost averaging into the S&P 500. That is a great and pretty safe way to make money over the long term. That's all for this one. Thanks so much for watching. I didn't really introduce myself at the beginning of the video because it feels weird when you're making a video about scammers to try and plug yourself, but I'm the founder of flankinvesting.com. If you want to learn more about what we do, there'll be a link to it in the description below. And if you want to join our community, we also have a free Discord, which the link will be in the description below. And if you like this type of content, please consider giving us a like and subscribe. That'll help us get our message out to more people. Thanks again, and we'll see you in the next one.